Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. Today, we're taking a look at Eli Lilly, ticker symbol LLY. This is a large cap pharmaceutical company with a market cap just over $500 billion. They have an impressive and vast suite of pharmaceuticals that they sell all around the world, bring in quite a bit of revenue. And here we are on Eli Lilly's annual chart, and you'll see that they are way above all the moving averages. In fact, this looks to be a new all-time high for the company. The RSI shows them nicely in the overbought zone, and it looks to start pulling back. Both stochastics are also overbought. The volume chart shows a huge spike in buying pressure, which is declining and has finally fallen back to average. And the MACD is also well above average and well above any other point over the past year, although it does not seem to have formed a peak quite yet. So we could still see another day or two of upward pressure for this company. So as you might guess, this is a shorting opportunity. It does not look like this huge jump here is sustainable, even though Eli Lilly is absolutely a good company. They have good profits. They do appear to be in an uptrend. It just looks like it got a little extended. And as we know, this huge gap here presents a problem because 90% of gaps will fill. And if so, this share price here, this is about a $50 gap. So that is a huge vacuum below the current share price, just dragging this back. And it wouldn't surprise me at all if Eli Lilly is eventually able to sustain the current share price, but it looks like it just got a little ahead of itself. And if we move over to E-Trade and take a brief look at the fundamentals here, you'll see this is good. As you might expect, there's very low short interest. It does have a lot of debt. It has more debt than 85% of other pharmaceutical companies, which is a bit concerning. But then if we look down at the other metrics here, the gross margin is higher than 74% of other companies, and the operating margin is outstanding, beating out 95% of other pharmaceutical companies. So it looks to me like they may be able to sustain that level of debt pretty easily. The PE ratio, as you might expect, is high, greater than 95% of other companies in the industry. A PE of 73.4 is high by any standard. It's not, unfortunately, it's not the highest PE I've ever seen, but it is certainly more than I would like to pay for a company, even one as good as LLY. And we move on. The return on equity, again, is an outstanding number. It shows it reinvests its earnings more efficiently than 98% of other companies in the industry. It has an average growth rate, and the dividend is low. So if you're looking for a dividend, this is not the company for you to invest in. Payout ratio is reasonable at 60%, but the yield is only 0.87%. So overall, these metrics are fine. Eli Lilly is a good company, and I believe this share price may be achievable, just not with the rapid jump in share price that we've seen over the last week. So I think this could be an opportunity to short the stock or to sell some bear call spreads or other options as you choose. But please let me know what you think of this in the comments below. And remember, none of this is financial advice because I'm not a financial advisor. But if you got something out of this video, I would really appreciate it if you'd hit the like button and subscribe to help out the channel. If you enjoy this kind of content, please hit that bell notification to be alerted when I post a new video. Also, if you'd like me to take a look at a particular company using these indicators, just mention that in the comments and I'll try to get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.